think it'd help everyone understand what that trade war means for the US economy, what it means for the world, why gold prices are skyrocketing, and the whole talk about de-dollarization, whether we should be worried.
Gold is simply a portfolio asset. Gold doesn't compete with the dollar, it competes with the stock market. It tends to go up when people are concerned about risky assets. Everybody wants to own the safe haven store of value because, let's face it, NVIDIA, AI stocks, they look kind of bubbly here. The whole de-dollarization topic is really drawn from a political context rather than an understanding of monetary mechanics. You have to set aside your personal politics when you're analyzing how things actually work. People try to import their own personal views into the behavior of the dollar. The dollar is as dominant as it ever was simply because there is no replacement for it. Trying to replace the dollar system would be like recreating the internet from scratch. That's the thing that made the Eurodollar so powerful and why it spread so far and so wide, was that it was that customizable that it could meet the needs of basically everyone in it. If you're trying to hide assets and keep them in US dollar terms, there are places to do so.
Yeah, it's like the dark web. It's like this web of transactions behind the scenes that cannot be controlled anymore. I think people don't understand just how massive it is.
It is a black hole. You have no idea what's happening in it. I'm actually long run optimistic on the US as well as the global economy. We go through these de-globalization, destabilized periods that last multiple decades, and then eventually the right solutions get put together and it leads to a period of prolonged prosperity. We're just in the down cycle and eventually we get out of it. But I can imagine the Eurodollar system is replaced by some form of digital currency.
Give me a completely decentralized one. If you look at stablecoins, they're all based on the dollar.
I can see stablecoins evolving several steps so that they become actual stablecoins on their own.
Yeah, so Jeff, again, really appreciate your YouTube channel. That's why I wanted to have this conversation with you. I think you'd help everyone understand what that trade war even means, what it means for their pockets, what it means for the US economy, what it means for the world, why gold prices are skyrocketing. I think they've risen more than they did in the late 70s. I think I could be wrong with the numbers. I'll let you correct me later. And the whole talk about de-dollarization, whether we should be worried. So let's start with the sexy topic first. Gold. Help us make sense of this price action.
Gold is actually easy to understand once you get out of the mainstream idea that it has something to do with the dollar or inflation. It's really not. Gold is not a monetary instrument as much as we would like it to be. I mean, look, there is a romantic ideal around gold, but that hasn't been functional in a monetary context for well over a century. So gold is simply a portfolio asset. It is stripped down to a store of value, and it is the preeminent safe haven store of value. So gold is not actually trying to replace the dollar. Nobody's going to replace the dollar with gold. Instead, gold doesn't compete with the dollar. It competes with the stock market or risky credit market. So the simple way to understand gold is it tends to go up when people are concerned about risky assets because it's a safe haven alternative, which easily explains how gold has behaved over the last several years. You go back to 2021 and 2020 and 21, 22, everybody thinks gold is an inflation hedge. The gold performed poorly during 21 and 22. It was sideways to lower, even though the CPI was accelerating at rates we hadn't seen since the 1970s. And the reason was because at the time, everybody believed the economy was moving in the right direction. It seemed like it was a recovery. It seemed like, policymakers had hit upon the right combination of policies that led to out of the pandemic and into a, long run period of prosperity. And under those circumstances, you don't want to own a safe haven store of value. You want to own the sexy stuff. You want to own NVIDIA and really risky stocks. So gold performed poorly when everybody was expecting it to do the opposite. And fast forward a couple years, now that we get into more clear and visible conditions that are associated with an economic downturn, suddenly gold is alive again. Everybody wants to own the safe haven store of value because, let's face it, NVIDIA, AI stocks, they look kind of bubbly here. Macroeconomic circumstances are at best questionable. So when you look at gold in the proper context, its behavior makes sense. And so the last move over the last, 2 months since the middle of August suggests that all the factors that I just cited are now being priced and then some into the gold market.
All right, great way to start because I didn't expect that. So you said it has nothing to do with the replacement of the US dollar, and everyone's talking about that. People love to talk about the death of the US dollar. I
Mario, they've been talking about that for 20 years.
Yeah, I remember I think the dollar, I only found out recently that the dollar percent, a share of the US dollar as foreign reserves, as share of foreign reserves, dropped more in the 70s and then picked back up again than it did recently. So it shows that everyone's talking about the fall of the empire. The US dollar's dead, especially after what happened with the Russian funds. We're going to talk about it. The seizure of the Russian funds in 2022. You're saying gold has nothing to do with this, but that surprised me because um, gold is a store of value. The US dollar is a store of value, and we do know that a lot of central banks are selling the US dollar and storing gold instead. China leading the way, but there's other countries: Turkey, India, Poland. Doesn't that
Yeah,
have
there's a
any
lot of
impact?
yeah, there's a lot of misinterpretation in all that. The world is not de-dollarizing to begin with, and it's not as easy as people make it out to be. The whole de-dollarization topic is really drawn from a political context rather than an understanding of the monetary mechanics that are in place. And one of the things you really have to do is you have to set aside your personal politics when you're analyzing how things actually work. You know that, Mario, more than anybody else does. In fact, you're really good about, but it's really difficult to do in a lot of different circumstances because you get very heated over politics and geopolitics and everything else. So, in many ways, people try to import their own personal views into the behavior of the dollar. And it really goes, I mean, it spans partisan politics. When Biden was in office, you mentioned Russia, you know, all the Republicans ran around saying that Biden had weaponized the dollar and everybody was going to move away from the dollar. The BRICS were going to replace it with some currency that wouldn't be manipulated by the US government. And then what happened? Trump gets in office and everything reverses. Now the Democrats are running around saying Trump is destroying the dollar with his destructive trade wars. And the truth is, neither of those were actually true. They're moving away from the dollar. And the reason why occasionally central banks and foreign officials sell dollar assets has nothing to do with de-dollarization, is they're attempting to deal with an acute dollar shortage. Whenever they're faced with dollar conditions that are difficult in their local area, because everybody needs to access the dollar system, when we go through these periods where deflationary circumstances develop, which are good for gold, by the way, we get these deflationary periods, it's difficult to source US dollars on the Eurodollar system. So reserve managers respond in exactly the way you would expect when you realize that their treasuries are reserve assets. So they sell the reserve assets to create liquid funds that they can use to try to supplement their local borrowers who are trying to access the US dollar system. So they're not selling dollars or they're not selling treasuries because they hate America or they hate their policies. They're responding to issues in the marketplace.
Interesting. Okay, so you're saying that the reason they're selling dollars is to deal with domestic issues rather than getting rid of the dollar or replacing it with gold. But looking at the numbers, though, the US dollar as a share of foreign reserves has dropped from 72 to 58%. Now, we did say earlier it happened in the 70s, so it's not the
Yeah, and I
first time
would
this
say
happens.
that's not actually a meaningful number when you're talking about reserve mechanics. What actually does matter is the amount of settlement that takes place, payments, usually through the FX markets. And FX markets are solidly 90% US dollar. And so when you see, like, for example, the rise of China's yuan in FX settlement, it's not replacing the dollar. It's competing with other currencies to be on the other side of the US dollar. So the yuan has risen in FX settlements to be the other side or taking the place of, say, the euro or really the British pound, which has really receded from global international finance. So the dollar is as dominant as it ever was, which, by the way, is not a good thing, not for political reasons, because the dollar system doesn't function the way we need it to. But the dollar is as dominant as it ever was simply because there is no replacement for it. In order to replace the dollar, you have to replace all of its functions. And this is the part where you lose most people. They don't really understand or appreciate what a reserve currency has to do, and more importantly, how it accomplishes what it has to do, which is to take money from where it exists and recirculate it all throughout the planet so that everybody has access to it at the same time and in the same way, or within varying tolerances. And it's incredibly difficult. It's an amazing, in many ways, it's a really amazing, astounding accomplishment to have done something like that. And it's not something that you can just replace overnight or even a couple years. The analogy that I use is trying to replace the dollar. It's really a system, it's a network. Trying to replace the dollar system or dollar network would be like recreating the internet from scratch. I mean, from the bottom up, from software to hardware to laying new fiber optic cables. It really is a massive undertaking. So we're
Isn't
kind of
China trying to
stuck
do
with
it
the
though?
US dollar.
China's working on it. Russia's been able to survive without the SWIFT system. So aren't we seeing a different plumbing system being built as over the last few years
Now, what you're
under our
seeing is
nose?
what you're seeing is various ways to try to work around the problem that we have with these dollar shortages. So the Chinese are trying to settle more in bilateral fashion because they have trouble acquiring dollars, and therefore let's try to settle in China's yuan. India is doing the same thing, trying to internationalize the rupee. not having a whole lot of success doing so. The Russians, the thing about getting kicked out of SWIFT, SWIFT doesn't really all matter all that much. SWIFT is just a messaging system. The Eurodollar system and really the dollar system globally is far more extensive than that. And as much as the Russians may have been kicked out of SWIFT, they still have access to the Eurodollar system largely through Middle Eastern banks, especially in the UAE. So they can still access dollars. It's just a little bit more cumbersome and inefficient. Um, but so the point is, there is not a parallel move to recreate the U.S. dollar system. What a lot of individual countries are trying to do is create bilateral workarounds to try to deal with essentially their limited access and their difficult access to the dollar system as it is not functioning the way it really needs to be.
But then I think the argument that countries are worried to have their assets, their funds seized, like what happened with Russia, if they're sitting on dollar reserves, that's a valid concern, though. There's a lot of money that was seized from Russia in 2022. Wouldn't that be a reason to try to move off the dollar?
Yeah, I mean, the irony here is that the Eurodollar system that we've been using for three quarters of a century or thereabouts actually started for that very reason. Soviet Union and Eastern Bloc countries that had dollar reserves and built up reserves in the 1950s were afraid that the Eisenhower and then eventually the Kennedy and Johnson administrations were going to seize Eastern Bloc and communist country assets. So they created, or at least they piggybacked on this Eurodollar architecture to basically hold U.S. dollars, or what's called U.S. dollars. There's actually no dollars in it. It's all bank
Yeah,
ledger money outside the United States. And so you have this very decentralized system that, I mean, so yes, they convinced banks in Europe to seize Russian assets while the Russians just move them to the Middle East or to China, where it's not likely to be seized. That's the thing that made the Eurodollar so powerful and why it spread so far and so wide was that it was that flexible. It was that easily, not as necessarily easily, but it was that customizable that it could meet the needs of basically everyone in it, including if you're trying to hide assets and keep them in US dollar terms, there are places to do so. That's how pliable and
it's like
flexible the
a
Eurodollar system is.
yeah, it's like the dark web. It's like this web
Yeah,
of transactions
exactly.
behind the scenes that cannot be controlled anymore. I think people don't understand just how massive it is. Give us a number. How big is the euro dollar market?
Nobody has any idea, and
Mm.
I've been doing this for 3 decades, and I still have no clue, and there's no way to tell, because not only is most of it offshore, and the term offshore really means regulatorily offshore, because these firms and these funds, which are really just companies set up in places like the Cayman Islands or the City of London or something like that, they're just names on a door that operate as a separate firm, but because they're operating in a regulatory blank space, you have absolutely no idea what they're really doing. There's no real reporting requirements going on that we go along with it. So it is really literally, Eurodollar University, which is what I do. Our logo is a black hole. And the reason we use that analogy because it is a black hole. You have no idea what's happening in it, but you can tell what's happening in it by the way it makes things move around it. So we have no idea how big the Eurodollar is. We just know that it's the currency that the entire world uses.
Can you explain if people listening in a very simplified way, what is the euro dollar?
Well, technically, a Eurodollar, what it started out being was US dollars that were held on deposit outside the United States. That's where the term comes from. It has nothing to do with the European common currency, which is it's a common mistake and
Yeah.
misimpression, because the term is Eurodollar. What all the euro means in the term Eurodollar is offshore or outside the technical US dollar jurisdiction. So you had dollars that were held in banks in, say, Zurich, or really a lot of it was in London or in Montreal and Japan and Tokyo. So they're holding this US dollar balance, these US dollar balances, and quickly understood and quickly learned that they could create a flexible, pliable global reserve system by abandoning physical currency entirely and going to a strictly ledger money format. So the US dollar system actually does not have US dollars in it. It's entirely bank
Just
ledger
numbers
money.
on a screen.
Numbers on a screen, ledger, it's all book entries. Everything is electronic. And so what the elegance and why this is such a difficult task to replicate, the elegance of the Eurodollar is that it enables people to move money at a moment's notice almost anywhere in the world. And the way that that works is by having all of these banks operating the network be able to talk to each other and interact with each other. So it's essentially like you have individual bank ledgers and even individual customer ledgers, borrowers ledgers, that integrate with other ledgers and other ledgers and ledgers and ledgers. So the Eurodollar, like a computer system, is integrating all of this information and compiling it and sorting it and reconciling everything all over the place. So it
So
really just
essentially, we'll call it like instead. So let's call it foreign US dollars. Or yeah, foreign US dollars will be so people understand it's nothing. It's not unrelated to the euro, and essentially it's just numbers on a screen all around the world. Everything's done on the web. And what you're trying to say earlier is that money cannot be seized as easily as people think it can. It's not money sitting in a certain country, in a certain bank that the US says, hey, hold that money and it's stuck. So there's many ways around it, which is why you think that what happened to Russia is not going to scare other countries because there's ways of using the US dollar or storing the US dollar as a reserve currency without allowing the US to seize it. Is that a fair oversimplification?
Yeah, you're right. There is nothing that they can, they don't need to send armed guards with armored truck to some bank somewhere and load up a pallet of actual physical Federal Reserve notes and transport it some way. Which is all they really need to do is call up the bank that they have the funds held in, or which, whoever's books that the dollars are sitting on, and say, transfer it to these people over here. So what the Biden administration did with Russia was nothing more than convince the banks where these Russian balances were held not to do that transfer. That's all that really happened. So if the Russians figure out a way to transfer funds before the US government can convince the banks to not do the transfer, they're perfectly fine. It's all
So
ledger
the
money.
the issues here is not the US dollars. The issue is the bank that listened to the US. That's what
So
the issue is.
so
But everyone's
so
making
the
it out to be
Russians, if you
the dollar.
yeah, if they made a mistake, it was holding their balances in European banks, which were more susceptible to the kind of political pressure that the US administration put on them. And then, of course, their own European regulators who did the same thing going along with them, which is why a lot of the funds have shifted to the United Arab Emirates and other places, probably the Cayman Islands, a huge surge in Cayman Islands activity, because there isn't that same amount of political pressure or political risk where the US government's going to be able to come in and say, you're not going to transfer Russian assets out of your bank because we don't want you to. Now there's always a risk of that happening. Look at what happened with FACTA in Switzerland for a long time ago. But it's a lesser risk when it's moved outside of, moved to different kinds of banks.
Yeah, agree. Okay, but there is another argument that indicates that the dollar is weakening and why the US dollar should not be or should at least be reduced as a share of foreign reserves for different countries for central banks is the money printing that's happening and the massive US debt that we're facing. The numbers are astronomical. I've got some of them here. Actually, I'll read out a quote by the former chairman of the Joint Chief of Staff, Mike Mullen. He said the following: "The single biggest threat to our national security is our debt." That's quoting his exact words. But to make it worse, that was 15 years ago. Since
So
then,
already
the
there's a
debt.
clue, right?
I don't. Okay, so please explain because like the numbers just don't make sense. Like to have debt back then was $13.5 trillion and debt to GDP ratio was 91%. Today, that same debt is 36 trillion, which is 125% of GDP. Ray Dalio always talks about debt being one of the main reasons for a fall of an empire. Historically, it's always been one of the indicators of the peak of an empire, and that's happening right now to the US. Net interest for the payment on this debt is has increased 600% since that quote by Mike Mullen. So how could you say that this is not first, do you think this is an issue? And doesn't it impact the safety of the US dollar?
The second part is no, and it's a hard no, and the reason why is that, yes, this is definitely an issue, but it's not the one that everybody thinks. And I understand where everybody's coming from because you think in simple economic terms, which is what, economists and central bankers give you, is that debt is really just nothing more than a function of demand versus supply. And so if the US government supplies a hell of a lot more debt, then what happens to the price of the debt? It has to go down, which means interest rates have to skyrocket. And that's what everybody's been saying since the ARA back in 2009, and it has yet to happen because they're missing the other side of the equation, which is demand for US debt. And this is where you lose a lot of people because it sounds paradoxical, but you have to understand that we are operating in a condition of depressionary economics where demand for safety and liquidity overrides every other single concern. And this relates to the malfunctioning in the Eurodollar system. There is no money being printed. In fact, money is being restricted because money is created by the banking sector. And the banking sector is not creating money in the same way it needs to and hasn't been since 2008. The timing is not coincidence. So since 2008, there has been heightened demand for safety and liquidity. And sadly, the preeminent form of safety and liquidity is US government debt. That's really the problem here is that because the treasury market is the deepest market in the world, therefore the monetary system and the financial system looks at US treasuries as the top form of debt. And in an extended period where demand for safety and liquidity overrides every other consideration, The government can supply as much debt as it wants to, and there are waiting arms for every last dollar of it. That is why, for the last 20 years, as everybody's been saying, the debt is getting too big, the debt is getting too big, the debt is getting too big. It hasn't made a dent in the treasury market. As I tell people all the time, the deficit is a huge problem, just not for the treasury market. The treasury market has other considerations. Where the debt becomes a big problem is that the federal government is enlarging its footprint in not just the economy, but in civil life. And that becomes problems all its own. In fact, as we've seen in the Japanese experience, the more the government does, the more the government intervenes, the more it does stimulus, the less the economy is stimulated. That just means it's lack of success, lack of economic growth, which means the government is going to come back and borrow even more to do more stimulus that doesn't stimulate. And you get locked into this debt trap. And the entire time, the government debt markets want more safety and liquidity, which happens to be government paper. And so you're just stuck in this rut that you can never get out of. And everybody that's waiting for the treasury market to blow up to get us out of this debt trap, they're waiting for something that isn't going to happen. So you're kind of stuck with this for a long period of time simply because nobody realizes the depression economics. And sadly, government bonds are they're considered to be the safest and most liquid form of
But what
financial
isn't it
instrument.
gold? Can't gold be an alternative to the US dollar from a safety perspective, a safe
From a
haven?
safety perspective, but not a liquidity perspective, and that's a big part of it because, everything these days and everything has been for, half a century going back further, everything is collateralized, and gold is a terrible collateral because it's not liquid. You try to sell gold in size and the market just disappears on you. So gold is safe, but it's not liquid, and so the liquid part of it is in many ways the more important aspect to why there's so much demand for US Treasury paper. It's because everything being collateralized, there's not enough treasuries for the amount of collateral that there actually needs. I know that's another thing that boggles people's minds. How can there be not enough treasuries when they have 36 trillion? But the reality is not every one of those 36 trillion actually trades and is actually liquid. So we actually have a shortage of US treasuries in the monetary system, which
How is there a
leads to a
shortage? But I keep hearing the news about countries selling US treasuries.
Yeah, that's the problem. That's again, they're responding to these dollar shortages. So while these countries, while these foreign official institutions may be responding to the dollar shortage by selling treasuries, other parts of the system, including other counterparties and other people in their own countries, are buying those treasuries. So as governments are selling their treasuries to mobilize their reserve assets to try to deal with dollar problems, the rest of the marketplace says, I want to buy those
Yeah.
because the reason you're selling treasuries in the first place is because we have deflationary conditions in money, and deflationary conditions in money means there's a heightened demand for safety and liquidity. So governments are selling treasuries for technical reasons that the rest of the world is buying for safety and liquidity. All actually fits into the same circular process of depression economics.
So going back to gold, why are central banks buying golds at these levels, especially China? I saw the China of how much gold it bought. I think after 2022, after the seizing of the Russian assets, what's the purpose of that?
It's just a portfolio asset. It's another way to diversify reserves. I mean, you could hold US dollar assets, but I mean, at some point, I mean, how many US treasuries do you actually need? It's so a lot of central banks and reserve managers are, traditional Keynesian economists. So they look at US treasuries as risky because they think interest rates are going to skyrocket. So we're going to own less treasuries as US reserve assets. Well, we have to own enough because we have to deal with our connection to the Eurodollar system and have to have US dollar reserve assets. So they're simply diversifying the reserve assets for a variety of reasons. And in China's case, they're doing so largely because they think it helps stabilize the yuan, which is a reflection upon China's increasingly perilous situation too. So they're trying to use gold as a diversification tactic, but also to help at least create the impression of the yuan being stable because it's backed by a variety of assets, including the preeminent safe haven asset.
Hmm. Um, what happens to this entire system if we get into a potential conflict between a lot of people are talking about China preparing for war, storing food, storing oil. Um, does this entire system just break? And if it does break, what replaces the US dollar? What replaces the plumbing that we currently have, the euro dollar? If we do see a conflict between major powers,
Yeah,
and I'm
that's kind
talking
of the
here about the
great
US versus China.
Yeah, that's kind of the great unknown. What really happens in that case? I mean, at some point, you got to think if there's a real shooting war between the United States and China, that China just gets cut off. I mean, they get cut off by everybody, and not just the United States. So it's kind of like the dollar system shrinks to those who are willing to participate in it, which would probably be the vast majority of the world. We not really know what kinda how messy that type of transition would be, because obviously I think there would be greater considerations at that point. But eventually the dollar system that would emerge would be the same dollar system, just it wouldn't have China involved in it and anybody who sided with China. In fact, I think there would be a greater demand for the Eurodollar system at that point, because of it would be, for all of its faults, it would be the one time tested, historical tested means of monetary settlement for a broad coverage of the world under less than ideal circumstances. So I actually think that strengthens the Eurodollar, but in a sort of a rump kind of a rump, sort of much smaller coverage than it had been before, at least significantly smaller. But I think it does lead to greater demand for Eurodollar settlement.
Another theory is that China's building what some call like a gold corridor. They're building, from what I understand it. Have you heard of the Chinese gold corridor they're building? So essentially
I've heard.
storing gold in different countries, and the goal is to loan these countries yuan, but then back that yuan with gold that is stored in those countries as a way to replace US dollar, for they want to replace US dollar, to be less dependent on the US dollar. And that's a strategy to kind of decouple more from the US system, trying to build their own system. And obviously, we get into BRICS, etc., as well. Um, and some people take it a step further. This is China preparing for potential conflict or challenging the US hegemony, the hegemony that they have in the financial world. Your thoughts on that theory?
Yeah, I mean, we've been hearing about those stories for, again, 15, 20 years. It really goes back to March 2009, when former PBOC Governor Xiao Chuan talked about how the Eurodollar system had broken down in 2008 crisis, and maybe we should look at finding a reserve currency system that actually works. And everybody took that to say, "Oh, China is challenging the dollar." And so every couple of years, you hear about a brand new scheme that's supposedly being cooked up by the Chinese to replace the US dollar. First, it was the first bilateral arrangement in 2011 between China, I think it was Russia at that point, or actually it was Pakistan or somebody else. 2018, the petro yuan was going to doom
Mm.
the dollar because now China was pricing oil in yuan, and that had no impact either. The digital yuan in 2021, that was the next thing. So the point is, there's always going to be these mainstream stories that come up, not because they're legitimately trying to challenge the dollar, but because people are interpreting these kinds of measures that the Chinese are undertaking through their own personal politics, and it's not really a political thing. The Chinese Belt and Road Initiative. The Chinese Belt and Road Initiative was the closest thing you could come to the Chinese using their economic and financial heft to try to get people out of the dollar system. I mean, Belt and Road was essentially, we're going to build all of these facilities for you. We're going to lend you the funds to do so, oftentimes in US dollars. And then when you can't pay for them, because we know you can't pay for them, we're going to make you use the yuan to buy all our goods and services. That really hasn't worked out all that well either. So, then trying to put gold into that monetary context makes it even more unrealistic, because, as I say, gold is not a good settlement instrument, especially across different systems and vast geographies. Gold is the reason why the world moved toward a Eurodollars type of system to begin with, was to get away from gold settlement. So, no, I don't think that the Chinese are doing anything other than trying to forward their own national interest, but actually to be creating a legitimate challenge to the Eurodollar system. Again, I don't think people really appreciate how difficult that is.
Mm. So why do you think people are hoarding gold then? Why are they hoarding the safe haven? What are they worried about?
Well, they're worried about a bunch of things. I mean, start with the United States. The US economy is not in good shape. All the data says, before the government shut down and took away the payroll reports, is that the US is losing jobs, and has been for quite some time. So you have the US economy that everybody thought was strong and resilient because Jay Powell said so over and over again for the last couple of years. Suddenly the US is losing jobs in the labor market. That suddenly makes the credit market situation that much more perilous. And we've seen that kind of pop up over the last couple of months since we saw labor market confirmation of job shedding. Because not only does that mean that workers are going to be in much more difficult situation, which means consumer loans are the chances of rising delinquencies and defaults in consumer loans goes way up, as does correlation in consumer lending, which is the absolute death knell of any credit system, especially when it's securitized. So essentially, you have credit risk from the jobs market on the consumer side, which is where a lot of these private shadow conduits have been lending to begin with, private credit. And then on the other side of that, the corporate credit, smaller and medium-sized businesses, how are they going to be doing and faring in an environment where we're already losing jobs? So the credit markets look increasingly dicey too on both the consumer side as well as the corporate side. And then you throw on top of that these collateral questions that have come up first with Tricolor, then First Brands, and now Zions and Western Alliance. And all of those individually don't really mean much. But when you expect that, when these funding arrangements were made, everybody said, yes, they're collateralized, they're risk-free. Nobody really paid any attention because they never thought for a second they would ever need to actually access the collateral. Jay Powell said the economy's strong, delinquencies are never going to be that high. And everybody who's been issuing private credit said, oh, we're doing the right thing, we're responsible. So suddenly the job shedding indications flip everything on its ear where it comes to private credit and really just risky credit in general. And it makes it a much more perilous situation. And under that situation, again, of understanding where gold actually fits in the financial system as a store of value, um, if all the rest of the stores of value start to look increasingly risky, that drives the demand for safe haven. So as we've seen questions in collateral, as we've seen macroeconomic risk rise in the United States, as we've seen credit markets start to ask uncomfortable questions and undertake really close scrutiny for the first time, I don't think it's an accident. That's why gold has soared, and that's just the U.S. You look around the rest of the world, including China, China is increasingly a mess too. The Chinese economic situation has definitely changed and in a very bad way over the last several months, really going back to June. Up until the last couple of years, the Chinese have said, and Chinese have purposefully operated what is essentially a backdoor jobs program. First of all, because after the zero COVID debacle, they it made sense to try to maintain steady employment while they were reopening the economy in 2023. So what they basically told all of their businesses and factories, look, keep making production, keep doing things, keep making stuff. Just make sure that we have everybody working because we're trying to
Mhm.
reopen the economy. And once the reopening economy takes off, then we can start to rebalance the situation. But reopening failed right from the very start. And so they're stuck trying to maintain steady employment as they're running supply well above demand, which has led to a period of 2.5, almost 3 years of deflation in China. Their GDP deflator just came out yesterday, 10th straight quarterly negative. And again, this is one of those things I don't think people appreciate enough. Chinese deflation over this 10 quarters adds up to 8%. 8% deflation over 2.5 years is enormous. And so what
Yeah.
the Chinese have done is, okay, you have a supply versus demand imbalance that leads to falling prices. Well, you try to raise demand. That's the most optimal way to rebalance prices.
That's the
That's what they've been
the
trying to
big
do.
That's their biggest weakness. Like deflation just allows you forces people to kind of hoard money because things are getting cheaper, so they hoard money. That reduces spending, and China needs domestic spending because right now they're very reliant on U.S. spending. U.S. has been China's piggy bank for all this time. But does that mean that China in this trade war, China's at a disadvantage more than people, at least more than China kind of acts like everything's gonna be fine, and they're slowly decoupling from the U.S. Or, that's just a myth, and the US China is still extremely dependent on the US consumer.
China is still extremely dependent because of these internal economic problems that go back a long ways. They go back to 2008, just like everything else does. And so the other part of that story is that as the Chinese have been trying to stimulate domestic demand to make up for that deflationary difference, they've realized it failed, and it failed spectacularly. I mean, they did that massive stimulus last September. They made a huge deal out of it. We're going to borrow trillions and trillions of yuan from the central government. They did that. They borrowed the yuan, and it had no effect. So what the Chinese realized this year is that they cannot stimulate demand. Demand is just done. And so you're stuck with either the deflation that is already 8%, which is enormous, which leads to all sorts of negative consequences because you're undercutting the value of production, which will lead to, rapid unwinding in employment, or you can try to cut back on production to rebalance prices down to where demand is, which is exactly what the Chinese have done. That's why they keep talking about overproduction or what they call involution now, or Neijuan is the Chinese term. What they're really trying to do is reduce supply to rebalance it with where demand is. But reducing supply necessarily leads to less employment and even increasing unemployment. And it also leads to increasing or decreasing levels of investment. So you look at the Chinese statistics ever since the Chinese reprioritized to trying to do something about their deflationary problem, they have fallen off sharply since June. So you put that together with the US economy and US credit market situation. The US is not doing well. The credit markets are a huge mess. There are likely to be some level of trouble moving forward. We've got deflationary signals. We've got banks hitting up the Fed's repo facility over the last 4 or 5 days. And on the other side, you go to China. The Chinese are in bad shape to begin with. You got the trade war in between, and you've got the sharp deceleration in Chinese economic activity. The summertime, again, the summer where everything starts to break up. Of course, gold is going to be soaring as the ultimate safe haven because there are major risks in every direction you look at. And we haven't even talked about Europe and the rest of the emerging markets. So
Europe is heartbreaking. Europe is
it
too
really
depressing
is.
to talk about. Well, I love Europe. It's just
I
so
don't
sad
know.
to see
There's a lot of
what they've done to
depressing
themselves.
topics and everything else.
But who would you say has it worse right now? China or the US? Because China's GDP numbers somehow are still resilient, if you want to believe them.
Yeah, I mean, you get past the GDP numbers. I mean, look at retail sales and a bunch of the fixed asset investment. A couple that I'm really
So it's just a
talking about
very
that came
lagging
out.
indicator.
Yeah, but they've really fallen off sharply here. I think China's in much worse shape, and they have been for some time, which is what this fourth plenum in China is really about. And you have to understand what the Chinese have been doing, really going back to the 17th Party Congress in 2017, is that they've realized that they can no longer be the factory to the world because the world doesn't have enough demand for what China produces. And so they are trying to break out of what some people call the middle income trap by being at the forefront of the next industrial revolution. So China wants to lead in AI and quantum computing and space exploration and all these high tech sectors as a way to create their own internal demand for the future. Instead of China building stuff for everybody else, the rest of the world is going to build stuff for China because China has invented all these brand new technologies. The problem with that is, first of all, the communists are terrible at doing something like this in terms of creating economic growth. But the other thing is they have to get there. It takes time to invent all these new technologies, which means that the Chinese economy has been languishing for well over a decade, really since 2018. It really started to fall off even before we got to COVID, and it never came back after 2018. So you mentioned GDP at 4.8%. There was a one time not long ago when 7% GDP in China was considered a recession. So China has fallen off in the 2020s,
I remember those days,
and
yeah.
they are waiting. They are just waiting for this future to be developed. And all they're really trying to do here is to keep everything relatively stable until this fourth industrial revolution, this Chinese led fourth industrial revolution starts to take hold.
Chinese
So,
led. Do you think China will lead it?
no, I have zero confidence that they'll ever be
Oh,
able to
wow.
do
Okay,
so.
okay, okay. Why is
But
that? So
they
you think
obviously, they don't think that way. I mean, that's what the Chinese I mean, do you really have any choice here? That's the alternative is to, just let the economy continue to slowly dwindle away, along with their demographic challenges that would just turn China into Japan, which, by the way, is the Chinese government and the CCP's biggest fears to become
mm,
Japan, which
mm.
is kinda where they're at. So really, the
Well,
China's in a really tough.
why do you think they won't win the AI and quantum computing race?
Oh, because, it's not as simple as just the government throwing money around at various projects. I mean, you look at
These
all the
that
industrial revolution waves that we've gone through so far, they're ground up. They're organic processes that begin in somebody's basement or somebody's garage. They come from left field. They don't come from, government-run laboratories. And when they do, in certain cases, small cases, the reason why socialism and communism always fails as an economic project is there's no feedback mechanism. It's always top down. So there's never any filtering through, trial and error processes. So the communists, not a good bet where it comes to any kind of
But what do you
economic situation.
that's what I thought, but then you see all these videos coming out, all these robot the robotic developers they're having there being far ahead of the US. You see, robo cars, restaurants with robots walking around, payment systems, they moved off the credit cards a lot quicker than the US. Um, drone, developments and improvements. You've got all these drone shows that you see. Their military is advancing pretty quickly, surprising a lot of military experts. Isn't that proof of the opposite of what you just said?
No, I think it's
Or is
all
that just
for show,
optics?
number 1, and honestly, if there was any value into having, like, drone shows and all of those types of efficiency what seems to be efficiencies across businesses, you would be seeing in a free market capitalist system. It is all just for show. It's all to demonstrate technology for the sake of technology, which gets back to what I was just saying. There's no feedback mechanism to put that into productive uses because it's being driven from the top down. If there was some
Agreed.
value to doing something like that, it would be done in other places around the world. It's not for lack of technology, it's for lack of actual productive usage.
Hmm. Um, so who do you think is winning or will win this trade war, and how do you think it will end?
Can we have both lose? Because I think that's where we're going. Both are actually on track to lose.
I think
There's a
there's gonna
thing
be
that
a Yeah, go ahead. I think, like, when I
No,
say who's gonna win, like, if they're gonna reach some sort of agreement, obviously, they're not gonna go all the way. If they go all the way, they both lose, and in that agreement, who do you think will have the upper hand? Who played their cards better? The US trying taking away that demand for Chinese products, or and trying to jeopardize the Chinese economy, or China curbing, rare earth exports?
I think both sides there will be an agreement. I think we all agree that that's the
Obviously.
case. There's really no incentive to take it all the way. The final agreement will have, some people will like, both sides will get something of what they like. My point is that it's almost irrelevant, because either way, you're ending up with a redistribution of productive capacity and activity based on non-economic factors, which is in the economic situation that we're in the 2020s overall, it's just one more negative factor to pile onto a whole bunch of other ones. So it doesn't really matter in macroeconomic terms. It does in politics, let's be honest. But in macroeconomic terms, the trade war doesn't really matter, or who wins it, because neither one of them are actually going to win in the end.
It won't change much.
No, because we have to the 2020s were determined by the pandemic and the lockdowns. This is the part that I think most people are missing when, because, all they've heard for the last 5 years that the economy, really 4 years, the economy is booming. We've had a labor shortage in the United States. Everything is great. We don't realize that, first of all, there are fewer jobs in the United States than there should have been had there not been the pandemic and lockdowns. The establishment survey alone is 5 million jobs behind the 2019 trend, the pre COVID trend. 5 million jobs. And the household survey is 10 million. That's a lot fewer people working, and it's not by choice. So you have a situation where we have less labor being utilized in the US economy. It's worse in Europe and it's worse in other places around the world. Less labor utilization, which means less economy. At the same time, we all suffered impoverishment by the supply shock, which raised prices in a step factor, in a step
Right.
function. Prices went up and incomes didn't. And so now you have a situation where incomes are only able to catch up for those people at the upper ends of the labor market. Meanwhile, the lower ends of the labor market are seeing no one hiring, no labor market growth. In fact, we're now getting job shedding. So not only are these people getting further behind because of the labor market being in a difficult situation, they're already way behind because of 2021 and 2022. And that's just in the United States. So we have these massive lingering overriding economic problems. You wonder why there's demand for safety and liquidity across the monetary system in the banking sector is because everybody outside the mainstream media knows that this is the case. And we all know it too. We can all feel it. Everybody still complains about inflation. What they're really complaining about is that prices soared ahead in 2021 and 2022, and they never caught up. And with the economy and the economic circumstances around the world getting worse here in 24 and 25, what that means is they're not going to catch up. And people can sense it, which is why you have so much political instability around the world. But in macroeconomic terms, it just leads to more and more grinding deflationary conditions, depression like conditions, which leads to heightened demand for safety and liquidity, which explains gold and interest rates.
What about Bitcoin as a store of, value?
Bitcoin is really nothing more than a Nasdaq stock, so it gets grouped in with Nvidia and all the rest of the AI technology, and that's the way it has performed. It's performed exactly, well, close enough like AI stocks have. So it's a store of value and a useful one, but it's not going to be a medium of exchange. It's not going to be a currency.
But it
And
solves the issue. It could solve the issue of liquidity that gold doesn't.
it could, but it still has major problems in any kind of wide scale adoption. Where that's why it won't ever be it won't be adopted in a wide scale. So it could be at some point a superior version of gold, but right now that's not the way it's behaving. Right now it's behaving like any other store of value that you see in the stock market.
Okay. And one more economy I want to ask you about that everyone gives me different stories is the Russian economy. Have you looked into this?
Now, I haven't really paid much attention to the Russian economy because it's disconnected in a lot of different ways, and to be honest, it's not really all that big. In terms of systemic terms, it doesn't really make much of a dent other than, say, in the energy sector.
Yeah, because it's just Russia's humming along despite all the sanctions and the freezing of the assets, the tariffs, that the world has put on Russia. Yet it still works. It still functions. It's still able to fight NATO. I- Does that mean economies could function without the US financial
Well,
system?
I mean, they're still connected to the US financial system to begin with, but let's be honest, I mean, the Chinese have essentially supported the Russian economy as much as they possibly could, and you do wonder, without the Chinese support, what would things have looked like? Because I know You know exactly what you're talking about, Mario. People have been saying the Russian economy is gonna collapse any
Mm.
minute now. It's gonna happen. It's gonna fall off, and it never does. I think part of that just has to do with the fact that, first of all, they're on war footing, which changes things quite a bit. But also, there is a lot of actual resilience in economic systems. They don't just collapse on their own. It takes a tremendous amount of strain in order to collapse an economy. Even war footing in Russia right now hasn't been able to do it for a number of reasons. But it's economic systems are incredibly resilient. People find a way especially when they're forced to by survival instincts.
Have you looked into what Milei's done in Argentina?
Yeah, unfortunately, that it looks like the Argentinian experiment is going to fall by the wayside of the Eurodollar malfunctioning, because that's how the Eurodollar works. It's exactly what happened back in 2018 with Argentina, the last reform that took place, 2016 and 2017. Argentina was able to at least convince a lot of people that they were on the right track. They went to Wall Street, they went to Lombard Street, they raised a ton of funds, US dollar funds in the Eurobond market, and everybody celebrated them as, this is the turnaround success story. And then the dollar system took a turn in 2018, and Argentina was one of the first casualties of that change, the deflationary circumstances. The IMF came in with a $50 billion
Ooh.
rescue, the largest in its history. That lasted about 2.5 months before the peso plunged all over again. The IMF added 7 billion in. The point I'm making is the Eurodollar system determines whether or not this succeeds and fails. And what the Eurodollar system is doing to Argentina right now is rendering its verdict that it doesn't think it's going to succeed. And therefore, the peso is plunging just like it did in 2018. And this is a sad one to see because it looked like Argentina, had
Milei
they
was
been
really
able to
trying.
continue, they looked like
Yeah.
they were going to turn a corner.
Yeah, I was pretty impressed by how much change he was able to implement. You don't think that, that the US loan will help them get through this? I know
The
they've been
intervention,
through there before, but
that's
the shock
another,
therapy is a lot. Go ahead.
the dirty secret of the Eurodollar system is that governments don't matter as much as you think they do, and it's been this way for decades. Um, Interventions like this are just for show. They don't actually change anything in the marketplace. The marketplace is so much bigger than interventions. It's really tried to A massive intervention like that, just like the IMF back in 2018, is really about trying to change a sentiment when sentiment has nothing to do with government interventions to begin with. So you can understand why Malay and the U.S. administration, put together this $20 billion rescue. But it's in the end, it doesn't make nearly as much difference.
A final catchy headline I want to get your thoughts on, because we've gone through a few and refuted. You've refuted a few. Is the fall of the U.S. empire? You are concerned about the U.S. economy. You're also concerned about the Chinese economy. Are we seeing a fall of the U.S. empire, and the fall of a hegemonist world into a multipolar world?
I think there'll be more of a multipolar world, but that won't necessarily mean that the U.S. empire necessarily falls. And I'm actually, people know me as a perma bear and a doom and gloom kind of guy, which has been exactly what the economy's done for the last 20 years. I'm actually long run optimistic on the US as well as the global economy.
That's
We
nice.
go through these cycles. We go through these long run cycles throughout history. We go through globalization cycles that are often tied, in fact, they're always tied to monetary circumstances. When we have monetary conditions that just combine in just the right way, it leads to this period of globalization and global prosperity. And whoever's at the top of the heap at the time continues to maintain themselves at the top of the heap. And then human nature kicks in, it all falls apart. And we go through these deglobalization, destabilized periods that last multiple decades. And then eventually the right combinations, the right solutions get put together in organic fashion. And we get through, the monetary system gets fixed, the banking sector, and it leads to a period of prolonged prosperity. We're just in the down cycle, kind of relatively early in the down cycle, unfortunately. And eventually we get out of it. Human nature is bad on the cycle and on the peak, but it's positive and optimistic because people figure out ways to solve major problems. It does take some time because there's all sorts of structural problems and inefficiencies with trying to create new solutions, especially in the monetary realm. But I can imagine being on the Eurodollar system is replaced slowly over time by some form of digital currency, private digital currencies, likely several
Okay.
private digital currencies,
But
not
pegged to
necessarily
what?
Bitcoin.
Private digital currencies? You mean a completely decentralized one? Because
Yep.
if you look at stable coins, they're all based on the dollar. Another
Right
indicator
now,
of how strong the dollar is.
right
But
now, I
you
can
have
see stable
a
coins evolving
decent.
several steps so that they become actual stable coins on their own and stand on their own 2 feet. And eventually, we get down the road with wide enough adoption and people get more comfortable with the stable coin environment. Slowly over time, the Eurodollar took over from Bretton Woods and nobody knew it was taking place. That you can see the same thing happening with private digital currencies, decentralized digital currencies, which offer so many tremendous benefits, potential future benefits, that eventually private digital currencies solve the Eurodollar problem. It combines to, unlock innovation and pent up demand. And we go through another multi-decade period where things really take off. And it looks a lot like the latter half of the 20th century.
Just nice. Jeff, I don't think you're as doomy and gloomy as people make it out to be. I've been in politics for a long time, so for us, you're an optimist. I appreciate your time. A great explanation, and we've covered a lot. So thank you.
I really appreciate it, Mario.